Well, actually, year-to-date target looks horrible.
Hey, everybody, this is Dr. Jacob Allen Spike, streaming live from Long Island, New York. We're just chatting about the markets, and I'm glad you can join us. We're
Yes,
starting live, we're streaming live. We're examining all the angles, right, Professor Spike? Come on.
all the angles, the
We got all
obtuse
the
ones, the
angles.
acute ones, and even the
The,
right angles.
the acute, the obtuse, and the right.
Correct.
All the angles. But we haven't come up with the right one yet.
No, we haven't come up with the right triangle, right
Yes,
angle.
but I see the negative sentiment everywhere, man.
Well, both they come on. The analysts there, the equity analysts there, it's killing me with that forecast.
The thing is, and this
You know what the forecast is?
nobody's talking about the regular people and the regular economy. It's sort of like, overall, this is good news for regular people, but because they got like 2 or 3 shekels in the stock market, they're crying.
Yeah, I mean, most people have something in the stock market these days. If they have a pension, if they have
Somebody gave us that number. Somebody gave us that number during the last show.
58%, I think they said.
Yeah, it was higher than I thought.
Yeah, look, I mean, both are coming up with a scenario where for the year they're going to get 0.00001% growth. They're basically calling for a flat S&P, and that's the optimistic point of view. The bear case is 3,000 spiders.
Wow.
And that's Merrill Lynch. Merrill Lynch is supposed to be bullish on America.
And then they're in the
Isn't
business.
that their slogan? Merrill Lynch is bullish on America.
That's right.
I don't think they run that commercial anymore. Merrill Lynch was bullish on America.
Right.
Maybe, yeah.
Yeah. Well, Dr. J is the last of the bulls. I can't help it. It's by nature. I'm bullish. I'm bullish the market. We shall overcome.
Yeah, I'm bullish, but not by choice.
Yeah, you're bullish because you feel trapped.
I have to.
Yeah. Well, I'm at a high level of invested. I'm usually much less invested than I am now. I'm about 80% invested in my trading portfolio. So I'm bullish even now. I'm saving some, putting cash. I'm still with some cash on the sidelines. If we have another dip, I'll go with some more. Ultimately, I think I'll be all in before this market officially turns. I'm not sure that we've officially turned yet. You guys, what's your feeling? Do we retest?
My feeling is that things might change beginning of year. Between now and end of year, which is another couple of weeks, another month, I think it's going to remain negative.
Yeah.
And maybe
it reminds me of 2018, where the month of November and December, which is traditionally good months, was terrible months in 2018. The market bottomed at Christmas Eve of 2018. So I could be a repeat of that, where we just see weakness right up until the end of the year. While others, a lot of analysts are calling for strength through the end of the year and then weakness in 2023. But everyone is suffering. I mean, our viewers are all suffering. If we're suffering, you can imagine how others must be suffering.
Right.
I mean, I consider myself a decent investor. I'm not the guru of gurus, and I'm hurting. My portfolio is down about 20% or roughly from the beginning of the year. So I'm not happy.
That's actually good, because I've been in a lot of these between the the coins and the and the Moderners and stuff like that.
Yeah, look,
I'm down closer to like 40.
I consider it doing well also, because Amazon
it is.
down. What's Amazon down from the beginning of the year? 50%, something like that.
Oh, it's probably not that bad.
40%.
Yeah, right. So exactly, if you have a lot of your holdings in just that one stock, which
Yeah,
is not unreasonable, then
I
yeah,
have a lot of my
take your
holdings
pride.
in Amazon, so therefore to only be down 20%, I'm doing something right.
From 167, 170 to 92.
So it's 50%.
Yeah,
Yeah,
it's a haircut.
it's horrible.
And I could easily imagine some people being like having that being the majority of their portfolio.
Yeah, I mean, I have, it's my largest position, but I don't know exactly what percentage it is.
But
20%.
mine too.
Don't forget, 20% of my portfolio is cash, so I didn't
Yeah,
lose money on my cash,
well, except for inflation,
except for inflation. Yeah.
which was what, only 8% this year.
Cheap.
I
Let's
know,
take a look.
it's better than losing.
Let's take a look at some of the charts and see what they're saying. People are talking about the long-term trend line on the spiders, which I showed us that picture a month ago. Now people are talking about it, but we'll show it one more time. Start off with the spiders. Look at that trend line. Look at where the 200-day is, and look at where we might be going over SPY. And then we'll look at the Dow Jones, and we'll look at the diamonds, rather. We'll look at Amazon more carefully, Apple, which is getting killed by the Chinese COVID policy. It can't make enough of the Pro Max 14. And what else did I list? UPS, which had good earnings, the consumer remains strong. Okay, so that's where we are. The Dow actually eked out a gain of 3 points, or 0.01%. Something was green today, as was the Russell, up 0.31%. That's interesting. Maybe the small caps will lead the market back this
Well, it's
time.
still saying that they weren't suffering as much.
Yeah. The S&P was down modestly, only 0.16. The NASDAQ continues to take it on the chin. Look, Apple alone, right?
Yeah.
Yeah.
I mean, NASDAQ is down 0.59. Apple is about 7% of the index. So, and Apple's getting killed on a daily basis lately. So what do you want to look at first? The spiders?
Yeah.
Yes, please.
0.17%, 395.23 on SPY. Take a look at that chart. This is the 200. We almost hit the 200. Last time we did hit the 200 and bounced way down. That was the August 8th, 16th high. We've come back up to the 200. We're probably a few points below. And now we're selling off to the 100-day, which I think is going to serve as support temporarily. So I think we're going to see more of this choppiness between the 200 and the 100 for a while until the market decides which way it's heading. And let's take a look at that long-term trend line that everybody's talking about. Let's do the 1 year. Is that good enough? I guess so. I'll tighten it up a little bit. The high was on 479.22. It seems like an eternity ago, doesn't
Right.
it?
Yeah.
We were actually in the stratosphere back then. I mean, we didn't know it. So this is a beautiful trend line. These three peaks, beautiful trend line. And
The only problem with that trend line is that it's downward.
Yeah. It's got the wrong sign slope.
that's true. But the good news is that trend line is above where we're trading now. So people are talking about testing that trend line. And the optimism will occur if indeed we can come up through it. So if we can, let's say we hit the trend line. Also we're in an upward trending channel. You see that on the S&P?
Yeah.
So it's still looking bullish. I think the 100 serves as support here. I don't think the bull market, whatever you want to call it, rally or bear market rally, whatever you want to call it,
Mhm.
I don't think that's over yet. But based on this chart, at least I don't think it's going to collapse. At the worst, I think it'll trade between the 200 and the 100. But at some point, it should hit this trend line again. Let's say it's at 1215. That would put it at about 406 at that point. So we have another 11 points to go before that would have happened. And the 200-day, by that time, let's see, where's the 200 now? 404. That'll be about 403. So my guess is we go above the 200 and at least reach the trend line. That trend line is going to be very psychological because the whole world is talking about it.
Hmm.
Remember about a month ago, back here, I pointed out that beautiful looking trend line going down. When I said 407 might be where we hit it, it's still reasonable to expect about 406, 407. A lot of some gurus are calling for 420 before we turn it around, but to the downside. I don't know what's magical about 420, but I do know what's magical about 431. That was the last peak. So that's a very significant line. 431 right up here. And of course, this 408 line, where I'm guessing we hit the trend line right about there. For us, actually below that. So as long as we stay in this ascending channel, we're still okay. And you know, I don't think we're going to go below it. If we do, then it's a sign that we're not going to even come close to that trend line, at least not for a long time. Maybe we hit it all the way back, all the way down here in March at 340, at 385. I mean, just because we're likely to hit it, it's not saying when we're likely to hit it. So we could hit it tomorrow, or we could hit it 3 months from today. That trend line, and that trend line is going to be tough to go through. That's the tough trend line. Professor Omar likes to think deviously, so he thinks we could go through the trend line, sucker everybody in, and then the big leg down. Deviosity.
The optimist.
The media is not talking much about the Ukraine war, which is a good sign.
That's not necessarily a good sign. This might mean we're going to stop supporting it.
There's nothing at all wrong with this picture. I like this picture, the S&P. If you show me this picture of any chart, I'm going to be fairly optimistic with this ascending channel. Until it breaks below it, I'm still bullish. Look, there's a lot of hits on this on this ascending trend line, right? 1, 2, 3, 4 hits, beautiful hits. This is a nice channel. So as long as this channel to the downside holds, I think the rally continues. When is it going to break? My guess is it could break December 15th, around there. It could peak right around there. So I would expect maybe a test of the 100, followed by a retest of the 200, and maybe we break that. So in other words, choppiness. I see more choppiness. Just what we've experienced from 11:10 through today, 11:29. More of the same between the 100 and the 200. All right, that's what I expect to see. What about the diamonds? Diamonds are doing the best of all the indices. Today it was actually up fractionally, but up. This is also a very nice trend line, and what's really nice is the August 16th high did it take it out? I think it took it out. Let's draw that line. The Dow is really very strong, led by oils and industrials. Yeah, we broke that line 2 days on. We broke that line on Friday, right?
Last week, yeah.
Yeah, the Dow is strong, very strong. So the Dow is showing a different picture than the S&P, an even more positive one. So let's say we can make a clean break of this 343 high on the diamonds. What would be the next stop? Let's take a look. The next stop is up here at 353. So right up here. 355, call it. So if we can make a clear break on the diamonds of 343, then I think we're good for 355 on the diamonds. I mean, we're not that far, like I said a few times, we're not that far away from the January highs. January highs were on the diamonds 369 up here. So the Dow looks like it could conceivably be making new highs, while the S&P lags behind and NASDAQ lags behind even further. That's how it looks. You want to see how? You want me to put put them on the same chart?
What, this and the spiders?
This and the spiders. Well, I could do the spiders in this, or I could do the all right, SPY. Let's do SPY.
Yeah. Just to get a view. Well, it's broad versus elite.
Yeah. So that's the blue line, I suppose, right? SPY.
Yeah, I see it right there.
It's funny because there are more stocks but less stable.
Yeah, let me.
That defies the law of statistics.
I have exactly 1 year now. So for 1 year, the SPY is down what is that? 13.87. That's all.
It doesn't feel it.
Yeah, it feels
do it with the Nasdaq. So if you want something to match what you.
And the Dow is only down 3%.
Yeah, Mark was just saying that the Dow is really only 6% off its high.
Yeah. Well, this is starting 11.
So the question I have is why are we all hurting so much?
This is not starting beginning of the year. It's starting 11/29.
Yeah, a year ago, which is even better, right?
So this is a
bios
chart. Should I do a year to date? I don't have year to date.
No, don't bother.
Oh yeah, they do.
They have 1 year.
Year to date, this looks more like it. The spiders are down 16.64.
Yeah, look at that. Wow.
And the Dow is down what is that? 6.84. Big difference.
What capping? Yeah. Wow.
Big difference. Should we throw in one more to compare
You want
with?
to, you want to throw this? Do you want to throw in the Nasdaq, the Qs,
What do you want me to throw in? The
the
Qs?
QQ? Yeah,
That should be the worst, right?
one would expect.
Purple.
Oh man,
29.48%. That's wow.
that looks more like it.
Yeah, that looks more like my portfolio, right?
Exactly.
Yeah. And if we throw in one more, the
Russell, the
IW,
IWM.
might as well. Then I'll erase them all and get rid
Yeah,
of
it
the
doesn't matter.
others. Every so often, it's good to do this just to get a perspective.
Pink. Yeah, look at that.
Pretty much the same as the
Tracking
spiders.
spiders. Yeah.
Yeah, pretty much the same. Very little difference. But the Dow is by far the winner right now. I think if there's another leg down, the Dow will play catch up, though.
Right.
Don't get too excited. If there's another leg down. And even if there isn't, I think the other indices will play catch up with the Dow. I think this picture will not totally reverse, but they'll come much closer together by the end of next year, I think. Hopefully in the upwards direction. Unlike the Dow's forecast of Bank of America.
But you see how the graph in the beginning looks so close to each other, and then toward end of this year, it like diverges.
Yeah, back at the end of March, it was very close. All of them.
Right.
Absolutely, very close. When the Dow was down 2.85% then, and maybe the Nasdaq was down 10%. They were a lot closer. Nasdaq was still the weakest, though. It's been the weakest all along, pretty much. For the whole year to date, it's been the weakest. But lately, it really is the weakest by far. It was close to the IWM all along. Now it's diverged.
There's a lot of bad news over there between what Apple's going through, what Amazon's going through.
Apple, if I put Apple in there, well, you think it'll be more like these spiders, right?
Maybe at first, but not lately.
Let me see Apple. It's going to be a crowded looking graph.
Yeah, but it's still telling a story.
Yeah. Apple is this
Apple
one.
is gold.
Yeah.
Actually.
This is
then why is the Nasdaq doing so bad if Apple doesn't seem to be?
Apple is down 20%. This S&P down 18%. The IWM is 16, right?
I guess you still have Facebook in the Nasdaq.
Facebook was got to be the lowest.
Probably pulling this down. No, I'm saying in terms of what's pulling down the Nasdaq. What's pulling down the Qs.
I'll take a look at Facebook.
Well, I hope that's the explanation because that's my least favorite. It could also be a lot of other stuff.
Yeah. Oh, look at Facebook.
Yes. Okay. There you go. There's your explanation.
Yeah, 67%. That'll kill the Qs. And Amazon, not so hotsy-totsy either.
It should be better than this.
I'll throw it in there.
You're right there. It's the top one.
Light blue.
Look at that. Yeah.
44%.
Wow.
The tail of the tape.
That's killer.
The tail of the tape. There you have it, folks. The tail of the tape.
Now, we're supposed to be having a good consumer. So isn't this a good time to get into Amazon then?
I think so. Yes, I think Amazon will blow away the earnings.
Yeah,
in the
it's
quarter.
got to be a bargain right now.
Yeah.
I mean, we've been saying that, but why can't we continue to say that?
Well, they have other businesses besides selling online.
What AWS is
Yeah,
probably.
that's not going to be growing.
What are you thinking, Kamal, in terms of Amazon?
Amazon, I think Amazon has bottomed, and I believe that after this holiday season, the fourth quarter will be awesome for them.
Yeah, that's
I
what
mean,
I
people
think.
are buying left and right. People are really buying.
They're really buying
Wait till
online.
the third half.
Online sales are going to go up every year proportionately, incrementally, I mean.
Yeah.
So
Right.
what were they last year? 35, 38%, something like that.
It was this year was massive compared. Well, last year is a hard one to compare to, but
Last year was good. It was like 38%.
Well, when we had the pandemic, everybody was buying online. I mean, that's when the online business really boomed,
Yeah.
when people were forced to stay home.
But Kamal, you have firsthand knowledge of the malls being very crowded, right?
Yes, in fact, we have an outlet, Tanger, in my town, and it's a massive, like mall, if you will,
yeah, it's a
of all
outdoor
brand
mall.
names. And it was full to capacity, where the police had to stop people from going in because it was like a gridlock inside.
Wow.
It was like 100% full,
The
and
MasterCard,
lines were outside the store.
I
The
saw
lines were,
the head of MasterCard Economics Institute on TV, and she was talking about this being a tremendously profitable retail season, Christmas season. I think she called for 7% better than last year.
yeah, I don't doubt it. Just
So,
one more note on the Nasdaq. Isn't Novax in the Nasdaq?
which one?
Novax, the vaccine, Novavax.
Novavax is it? Yes, but they don't have a heavy weight.
Yeah, but it went down like almost 90% of
I
its.
know, I know. A lot of biodrugs.
So to answer your question, Professor Spike, why are we down? It's because of the biopharmaceutical
No,
companies.
I'm talking explicitly about Amazon. Why is Amazon suffering so?
Let's take a look at the
You're right.
IBB.
Bio's killing everything else. I agree with you.
You want to look at the IBB? Throw that one
Oh
in.
yeah, since we're talking bios, let's see where that fits in there.
Yeah.
Be funny if it was.
Wow.
Only
Where is,
down 10%.
what color is it?
It's
The red
red.
one.
Oh, okay. That one's not too bad. That one's still tracking the S&P.
It's better than the S&P.
Yeah.
But the XBI is worse.
Oh yeah, right.
I think the XBI is definitely worse. Let me get rid of this one, and I'll throw in the XBI. This is fun. I don't know why.
It is.
In a morbid sort of way.
Mm-hmm.
Well, it gives you perspective across the board.
Yeah. Where is it? 28% versus 13% for the IBB. Now you know which index to be in, not the XBI. That's
Right.
the wrong one.
Now I feel more sorry for the colorblinded people.
You see, this one, but the XBI is exactly the same as the NASDAQ, the Qs.
All right. Well, that actually explains a lot, doesn't it?
Yeah. Anything else you want me to throw in or take out?
No, I can't keep up with this.
Exactly.
All right, let me get rid of this. I'm going to get rid of all of it. Clear drawings. Trying to get rid of it. It don't want me to do it. It won't let me get rid of it. I'll X them out one at a time. Oh, I'm Xing out the averages. Xing out the wrong thing. Come on, clear drawings. Why doesn't let me do that?
You're almost there.
All right. I'll leave the spider. I'll leave the diamonds. And what average did I chop off? I chopped off the
The
12.
daily,
I chopped off the 12-day, didn't I? Yeah,
it's whether it's 12 or 9 day.
12 or 9. I don't know whichever one I was using. I don't remember. You know what? Let me throw in the 20 instead, just to be different. 20-day. People like the exponential, 20 exponential for whatever reason. So I'll throw that in. I'll make that the green. The 20 is above the 200 is above everything. So we're a short-term bull market. It's consistent with that. All right. It looks very much like the 12, what I had before, the 12 or whatever it was. Anything else? UPS. UPS had terrific earnings.
No wonder. They're up and down my block many times a day.
Yeah. Up today, 3% on a down day, 184 now. It's still it's if we're going to really have a tremendous holiday season like it's starting out, UPS is still a buy, I think. I mean, look, we're way above the high of the year, which was way below that. I mean, 233. And if you try to draw some kind of trend line, we're just breaking that downward trend line, which is a positive thing.
Yes, it
And
is.
if we break the 200, it's going to be very positive. UPS might be not a bad place to hide in case the market is not great. I think UPS will do well. It won't collapse anyway. UPS looks like a good place to hide. One more for the road. Anybody? Any of our viewers have a request?
No, they haven't been talking about specifics pretty much on the today.
Then let's do a biotech, BCRX.
Yeah, right.
This is my largest bio holding.
Me too.
Yeah, we're still waiting to hit 20 again.
I'm waiting for this gap fill. I think it's coming. I think 1788 is coming, but we may have to wait a while, But it's coming. Maybe we have to wait a few more months, but I think it should get there. It's doing well relative to the market. It's in this trading range right now. From what is it? Roughly 15 to 11 to 15, roughly. So we're in this trading range, and that's it. We're on the wrong side of the 200, however. But one good thing is we had a cross of the 200 by the 50, positive cross. We also had a cross of the 100. So the 50 is above the 100, above the 200, momentarily anyway.
I was thinking of selling it the other day at 14.
You must have more junk than this to sell.
Exactly.
I do.
I mean, I guess this is the season to do some loss harvesting.
Yeah, I mean, probably you should sell.
And I probably wouldn't do it on this either. I'd probably do my Neo instead.
Neo, I would hold Neo.
Really? All right.
Yeah. It looks like it's starting to move in the positive direction, along with the rest of the Chinese stocks. But BCRX doesn't look like any reason to sell it.
Right.
Not at all. Probably more reason to own it. I don't know what happened after hours. Is there news? The roof fell in after hours.
Oh boy, look at that.
Yeah, there might be some news. I don't know. Can you check?
Can't be good news if there is news.
Could just be a flake, one share traded or something.
Right.
Yeah, now it's 1263. So forget it. It was
All
just a flake. Flaky thing.
Gotcha.
All right, so that's it for today. We covered a lot of ground. We gave my forecast. I didn't really give a specific forecast, but I'm a lot more bullish than Bank of America is. And thanks for coming, everybody. Chucky, Mark, indubitably. See you all Thursday, hopefully.
Yep. See you then. Bye bye, everybody.
Take care.
As always, we own due diligence. Our opinions strictly owned, do not constitute investment advice. Check with an advisor before acting. Tell a friend about us. Ciao.